And can you share as well, how do you identify good opportunities to invest in? What are your investment criteria?
Sure. The starting point is the same that any VC will tell you. It's going to be market, products, and team. It doesn't have to be the world's biggest market. We don't have to assume that you're going to sell to everyone. But obviously, we need to believe that the problem that this company is solving is a really big problem that's going to make a meaningful impact on their customers, maybe the world. So that's an important criterion. Now, naturally, so that's the why, so to speak. Well, then we want to understand the why now. And the why now is, again, partly the market, that the market recognizes that they have this problem, but also that the product and proposition is uniquely taking advantage of modern technology, of modern techniques of serving the customer, and so on. In other words, that there is a unique value proposition throughout end-to-end the customer experience. It usually starts with the tech, but it might extend through the whole customer lifecycle, that they're really delivering something truly differentiated. And finally, of course, I talked about the team. Well, this is the team that has unique insights, not just now, but for the next many, many years to build a really meaningful platform. And that this is the team, I would also add, that has the good values to build a sustainable company. I think that there's been too much over the last few years of, frankly, get-rich-quick schemes, especially when money was effectively free during the bull market, when interest rates were zero. But really, at the end of the day, it's about the fundamentals of, is this the team that's going to build a lasting success? And to have that, you need to have the right combination of ambition, but also humility and good values so that you can continue to attract good people and build a great team that goes beyond just the individual founders. Now, the final thing I would say is we are Series A and B investors. So we're not investing in companies just when they have an idea, even not just when they have the first working product. So the fourth thing we look at, of course, is traction. Obviously, it's for us important that where we can be helpful, which is helping to grow the team, professionalize the team and processes, think about a more effective go-to-market and how you can scale that. Well, the company needs already to be at that point where it's starting to scale, and now it's looking for people to support that growth. And so that's the fourth element that we really concentrate on.
And how do you generally see the rates of investment into startups? Obviously, we saw the bull market in 2021, and then all markets went down. So as well, VC investments dropped a lot. But how much more now VC investors are selective when it comes to the investing into startups? And when do you expect the next bull market and as well the bigger investments into startups?
Great question. Of course, I would say if I knew the answer for sure, then I would be the most successful investor in history. So recognizing that, sadly, I don't have unique insight, Anna, but let me try my best to answer that question. So look, I would say that already there is more appetite amongst VCs now than there was 3 months ago, 6 months ago, even 9 months ago. I think this is driven by the fact that interest rates seem at least to be stabilizing. The economy has so far proven to be reasonably resilient. And many founders recognize that the world is not the same as it was 2 or 3 years ago. They have become, again, much more thoughtful about the basics of running the business, not just going out for growth and assuming that they can raise another funding round again in 12 or 18 months. And so it's a coming together of the overall market stability and businesses that are now built to reflect the quote unquote new normal. So I think that there is more appetite to do business again. Also, there are more businesses who also have appetite now to have a conversation about what the right partnership looks like. And so now it comes back to VC again being a relationship business. Whereas I think in the peak of the bull run, it got a little bit transactional. You would talk to obviously a good startup and they would say, look, you've got about a week to make a decision. Do you want in or not? Here's the price. Let's go. I think that's great if you're just looking for money, but most VCs, there is a relationship, there's a partnership. Most VCs are going to be involved with that company for 5, 7, 10 years in the future. Well, that's longer than the average marriage lasts in the Western world. And you can't divorce your investor and you can't divorce your investment. So I think it's quite a good thing now that there's just a little bit more thinking on both sides of the table. Now, to your big question, ultimately about when do the big investments come back? When is there a bull run again? Look, that's the $1 trillion question. Look, I have to tell you honestly, I don't think that there will be a real bull run. If you force me to put a time frame on it, I don't think there'll be a bull run again in the next 12 to 18, 24 months. I think business will pick up again. But I think we're going through a reset that has echoes, not the same, but echoes of what happened in 2000 and 2001, and also what happened in 2008. And so that can take a few years to really work its way through the system. We've obviously seen changes in valuation. We've seen an evolution in how founders and their investors think about the trade-off between growth and building a sustainable business. I think we are still in the process of seeing an adjustment of how much money is going to be available for VCs to deploy into startups. There are still some growth funds that are out there who have been fundraising to raise mega funds like they raised in 2021. And there is mixed feedback coming back from the market. Some of these mega funds that were raising 15, 20 billion funds, they're now looking like they will settle for a 2 billion, a 5 billion fund. Those are still big funds, but that's obviously 50 to 75% smaller than what they were looking to raise and maybe what they raised in 2021. So we're still working our way through this and what it means for especially the Series C through Series H, let's call them rounds, the pre-IPO rounds. And so I think that will also have an influence on what that means then for the early stage community.
Actually, that was quite interesting comparison with the marriage of the startup and VC investor. And thanks for your observations on the market. And you focus on European and Israeli startups. But how do you see overall the startup scene worldwide? Because ATARI as well invest across the world, in US, in Asia as well. So which regions do you see the most active in terms of innovation, startup scene, and as well in terms of investing?
So innovation and startup scene, I'd say we still see it all around the world. We've been investing since 1969 as a fund. So let's just say we've seen more than a few cycles, macroeconomic cycles. And I think the consensus is that the level of distribution of insight and innovation has never been more global than it is now. So we are talking to startups even in Latin America. We've spoken occasionally to startups in sub-Saharan Africa, as well as in our core markets of all of these areas. So the innovation is still very great. To take an example, there are more AI and ML graduates in Europe than there are, in the States.
Really?
So this is on a per capita basis. So I mean, there's tremendous knowledge and skill in Europe in one of the hottest spaces in the world right now. I'd say there's obviously some, global macroeconomic, let's call it dislocation, we can't get away from the fact that right now, there are question marks about relationships, maybe between countries like the US and China, or the Western economies in China. But there's tremendous innovation going on all the time in China as we speak. And we have a presence in China as well. So I wouldn't say there's any unique claim. I do think different sectors thrive at different levels. So would you bet behind a new LLM coming out of Southeast Asia or the Middle East? Probably not, because the data that's available and the population base is, maybe not as great as the major markets like the US or China. So I think you have to be thoughtful and selective about subsectors. Now, you asked about investment. So that's the interesting one, that there is a clear difference there at the moment. So two things that I would highlight that we still see as being very hot, which is healthcare in China. Tremendous opportunity there. Obviously, a huge population with many demographic challenges, and also far less spend per capita on healthcare and far fewer hospital beds per capita than the Western world. So there's a lot of activity in healthcare, biotech, and healthcare services in China. The other one is, of all the major economies that has been so far a little bit separated from all of these macro challenges that we're talking about, has been India. India is not as affected by the crazy inflation, by some of the other macro issues and extremely high spikes in interest rates that we've seen in the rest of the world. And on top of that, India is benefiting from a real increase in foreign direct investment, in terms of, for example, Apple announcing that they're going to open up manufacturing plants in India. Yeah. So there's a lot going on in the Indian economy that is largely separate from the slowdown that we've seen in other geos.
And as well, now many people moving to the Middle East, specifically to the UAE, like it both, there has been always a lot of capital, and now as well some talent is moving there, especially with not friendly regulations in the US. Many people seeking to move out to other countries. Does ATARI invest into Middle East, or do you have any plans to invest into Middle Eastern companies?
At the moment, we don't have any specific plans. It's a very exciting area, and as you said, there's a lot of capital and growing amount of talent there. I think we are increasingly talking to companies who do business in the Middle East. For example, there's some great fintech opportunities and innovation coming out there. Potential for leapfrog technology because of the high mobile penetration, the young population, and still quite large elements of cash economy. So there's quite a lot of scope there for growth. But at the moment, we are not looking at that as a geography where we are specifically going to invest in Middle Eastern companies.
Yeah, guys, thank you for sharing your experience and insights with us.
Well, thank you very much for inviting me, Anna. It's been a real pleasure.